Hi guys, this is Alfred from BinaryOptionsTutor.com. I'm here today to talk about channel trading. We're going to do a little binary options channel trading system, and we're going to highlight end of day speculative trade that I done on yesterday. But before we dive right into that, I want to show you the trade that we're going to actually highlight and explain on the charts. And I also want to show you a dreadful mistake that I made. And don't feel bad. This is just a demo account, but I just want to point this out. This trade up here that I've got highlighted, this is a trade I got into at a price of $210. I was selling at 102.60. Meant to be selling at 102.80. Got in the trade, realized it's wrong. Don't just look at the charts. I guess it's the moral of the story. Also look at your contracts. Uh, I held the trade for a while, looking for a little pullback. Thought I could make a few bucks and then get out. Never happened. I ended up leaving the trade and just ditching it with a small loss. Took it on the chin for about $48.90 when you count the entry and exit fees. Okay, that out of the way. Now we're going to get down here to what we really came to see, which is our speculative trade that I put in before I went to sleep. I want to point something out. One reason that I sold this contract after what 40 or so minutes in is I was aware this contract was going to expire, and I was aware that at the time that contract was going to expire, and furthermore, even into that contract, I was not going to be able to manage that contract. I was finna go to sleep, and it's just a demo. But if you trade entirely nothing like what you would trade in a live account in a demo, then you're missing a lot of why you would be demo trading. You've got to be thinking about these things and running these different scenarios through your head while you're in demo, and while it doesn't cost you, that's a great time to do it. Experimenting on strategies while you're in demo, while it doesn't cost you, again, it's a great time to do it. Okay, so I'm gonna get off that wagon there, and we're gonna focus on our trade here. This is a trade that I put in. I didn't know if this trade would happen or if this trade wouldn't happen. It's a sell on the dollar yen at 103.00. That's a whole number. We're right there at 103, and I'm trying to sell at $80, which means there's 80. Well, I'm sorry, I'm trying to sell at $20, which means there's $80 risked on each contract, and I was putting in an order that if I could get into a contract at $20 to sell, then I would be willing to purchase 15 contracts. When I went to sleep, that order was executed. By the time I got back up, I was in that order, and that order was in profit of about 15 of the $20. So, you know, there's something to be said for the end of the day overnight before you hit the sack trades. If you're uh, if you're able to plan very well, or if you're having trouble with discipline and chasing trades, and something like this is doable. A long time ago, I used to do a lot of end of day stuff, and I used to sometimes set up trades that I could uh, totally get in and out of, and sometimes I'm able to wake up the next day and see that the plan has played out as I'd hoped overnight. And I'm going to talk about how I arrived at some of these numbers, and why anybody would try and start something like this in action overnight. So let's drop this down. We can see that we got in here for 1200 risk we managed to get out with 1500. So notwithstanding the fees, that would have been a roughly 25% gain on that particular trade, $300. Now let's look at the charts and see why we done it. First thing we're going to look at here, these are just regression channels, and we've got some regression channels on here. We've got 3 simple moving averages, excuse me, and we've got some different support lines, and of course in some cases they would be resistance lines, just manually drawn onto this chart. Now first, let's go back and review a few things. You can see these hourly, these are all daily candles, and you can see that I'm drawing my lines basically around the end of this line. I drew around the top of this previous wick, but I had a lot of confirmation here in that I can see some hourly, I'm sorry, daily. I'm so used to trading off of hourly charts nowadays, or 5-minute charts, but I can see some confirmation as the open and close of these are also coinciding with this line. Now since this is a daily chart, I can get all the way back to November, yeah, yeah, well, early December, right here on this little chart. So I can see a lot of ascension, market moving up, and then I see where I've got my channels drawn. Now on the day yesterday when I was actually taking this trade, I could already clearly see that my channel is telling me that overall dollar yen is trending down, and my simple moving averages, the yellow being our slowest moving average, that's 25, aqua color being a little faster, that's 9, and we've got a red 4. Those, for the most part, they have been trending down. We see a little clip where our fastest moving average is starting to cross the aqua and starting to cross even the slowest moving average here. So that's gonna always line up, is if it happens that we're going to start seeing a turn. But the only thing I'm looking for on this chart is it's a daily chart, and I'm looking to see the daily trend of the market, and I can see that the daily trend of the market is down. Now if I'm going to put on a trade and I know that I'm about to fall asleep, I want the trade that I get into to hopefully move in not a counter trend, but hopefully move in the direction of the trend in my favor, so that when I get up, I'm not gonna have something to manage. I'm hopefully gonna have something that's been ticking in the direction of the plan that I put in place. So first thing, I'm looking at what's direction, and that's what I've got from my channels, and that's what I've got from my SMA. We also have a value chart here, and you can see that we were clipping around 24 pretty often over the last week, and at a point we got there again on the day. We were very close to the high of the day when I got in, when this order was actually filled. But I wanted more in my favor, and I wanted a little bit deeper study. I know the market is trending down. I know that I'm around the high of the day, so I'm looking for an anomaly, but I need more to figure out if in fact, if in fact this is an anomaly. So we're going to go over and look at our hourly chart, and we've just got the FRB template here on our hourly chart. And what I'm going to point out is, I've never touched on this before, but there's some statistics here, some little historical I guess you could say they're historical volatility averages and swing data. And I'm going to point out how I'm using this daily and 30-day data in my hypothesis here. You can see that at the time that we got involved in this trade, uh, the total swing up on the day was probably around 38, 30, 38, 39. At the time I looked at the trade before I crashed, we were probably at 38, 39. Uh, at the time that I looked at this and I set everything up and I said, okay, if this happens, then Nadex, get me into this order. That's already it was slightly above our 30-day average swing up, which says 361, but we really want to interpret that as 36 pips. And so that's something that's we're starting to get above average for our 30 days here, and that's something to consider. That's something that helps me to build my hypothesis. Another thing that I'm looking at is our 30-day average swing down is 594, but we're going to just interpret that as 59 pips, and that gives me that really we're even the math is telling me that for the most part this market seems to want to trend to the downside. And I didn't touch on it, but we've got our on the total largest swing down, which was just 4, and that's less than a pip that we had swung down on the day. That was telling me we were really on a day that we were seeing some above average uptrend in the market, and our channels also indicated to us that we were even above the channel, and we were trading aggressively to the upside as well. So we've got a lot of things to look at here, but one thing that gave me a little minute of caution is that I was aware that we're obviously in some uptrend. So if I'm going to go and lay down and not babysit the trade, I want to make sure, or as best as I can, I want to speculate by finding a strike that this is where we're at the average, where when I actually put the order in, and I wanted to get a number that would be really outside of some of our resistance. That's why if you go back over here for just a second, let's go back over to our daily. You can see we had that wick just yesterday, and that wick was at 102, 738. Let's call it 102.74, and so I'm gonna add a little. I'm gonna take the strike higher than that, and the strike right higher than that would have been 102.80, but I don't want to be anywhere near that strike there. I don't want any pain. or any potential of pain. I want to take the next strike that's even out above that. Because again, on my value chart, we're not here, we're not closer to the uh, 28 on this value chart. We are, we would be above the channel, and we would be above the simple moving average, and we even ended the day there and that under those same conditions. But I want a little extra, so therefore that's why I added those extra 20 pips on. And I just wanted to touch on that. Now another thing that I was looking at here is, you can see, is even as I was doing this trade, we had already broke out when we had already seen our first resistance line here. We were tackling that line, and eventually over overnight and into early into that day, we did break that resistance one on the pivots, because as you know from the earlier videos, after I'm outside of these Murray math lines, there's nothing I can do but look at these standard pivots. So we've broken R1, and I skim a little chart back here, and I can see there's our R2 up there. We didn't quite make it up there. What happened is we stopped somewhere around 102.80, and we had a wick, so we had a very sharp drop off on that hour, and we began to descend back and close that trade out after holding it the entire time with a profit. Um, One thing I had in my mind is I wanted to know where that next resistance line was, and I can see even that line was, it was already there at the top of the day, and even that line was considerably about 14, 15 pips below my strike, and also my strike itself was at a whole number. So I was looking for, if we would have made it to that strike, I'd be looking for some impulsive selling to move the market back down. But what I was really hoping for was to really, because of our historical volatility, because of what we saw over here in this statistical area, I was hoping that we would never, really never get to the strike at all. And we pretty much just done an average day of trading. We hit about our 30-day average, and we hit a round number, maybe got a pip or so above it, and we retreated. It was the last day of trading, and it was a trade that is contrary to the longer term trend that we first uh, interpreted over here on our other little channel chart. And that's it. We see the direction of these channels. The channels are going down. We can see in here some slow to mid to fast moving averages, and in here we were just perfectly showing and painting our downtrend. And we're just, if we believe from our hypothesis that the market on a daily long-term basis wants to trend down, then obviously we're going to try and find a strike that's a little bit higher than expected. Let's say if I was getting in at 36, if I'm getting in at yeah, it was probably about 36 or so pips up on the day at the time that I was getting into this trade. And if I'm getting in there, and if I know from my little statistical data over here that the the largest swing up that I've seen on the in the last 30 days is 827. We'll call that 82 pips. So you know there was a chance that we could have moved another 50 pips up, and in which case that would have put us right around 103. But I didn't think there was anything coming out that should be impactful, that should make that much of a move, and I was already starting to see some stalling and consolidation around the first resistance level on our standard pivots. So all of this is just using the tools, using the indicators, and putting it all together to form a hypothesis that you're going to trade around. That's all I really had today. We were just talking about using the statistical data. Sometimes guys will say, well, what's all this for? There are a lot of uses for it. It just depends on, how you want to use it at a quick glance, along with all of these hypothetical lines over here, combining them at a quick glance to uh, get some ideas together to trade around. And I brought in our other little channel chart over here because I really wanted to illustrate that the trade that I used in the example was a daily trade, and so I really wanted to illustrate by looking at a daily chart. One great thing about looking at a daily chart, and sometimes we get caught up on the smaller 5-minute charts or the 1 hour chart, even a 4 hour chart, but there's not every candle on here. It's got 24 hours of sentiment built into the candle. Well, not on this chart because I'm on IBFX. There's a 6 day. But let's just skip all of that. Pretty much, for the most part, every candle has a daily sentiment built into it. And that means you can look at the price action on these candles, and you can build things like these regression channels. And there's a lot more market sentiment built in to every little component of this chart than there is on a 5-minute chart. Get out of here. That's that one person can put in an order and throw off your 5-minute chart, but you're seeing the sentiment and the work of several retail traders putting in these orders when you're looking at these 24-hour charts. Now, this isn't going to probably be of much use to you if you're going to go out there and trade 5-minute, 10-minute trades. That's why most of the time you see me on Markets World in these videos, and I've been using the 5-minute charts with the FRB template. But I just showed you something you can use the FRB template for, even to help you factor on a daily hypothesis. And this is just a simple little chart I threw together here with some simple indicators that are very common. I'm going to put up some of my favorite little common custom indicators, maybe even with some little small modifications that I've found useful over the years. We'll try and put that up on our site very shortly. But right now on our site available is our famous FRB template. Not really famous, but it's getting there. We've gotten, I believe, close to 1,000 downloads now of this template. So a lot of people have discovered Murray Math. A lot of people have found some amazing uses for these envelopes, and I think it's been very helpful to a lot of people. And this is free. We do have premium content on the site, but this template, all these statistics over here are aggregated every day, and these lines are dropped onto your chart every day. This is completely free. The rune, customer rune, I'll talk about that in the cyclical way we use it on a future video. All of this is free and available on our site, binaryoptionstutor.com. Until next time, guys, please drop by the site, pick up this free template, look at some of the other free online tools that we have available on our site. I'll try and leave a link to the site also down in the description. And if this information has helped you, please help us by commenting, sharing, and subscribing to our channel. I'll see you guys next time. Once again, this is Alfred from BinaryOptionsTutor.com.